Welcome to the show. Let's look at some longer term charts courtesy of Colin Twiggs' diary. When I used to trade and manage portfolios, I always looked to Colin Twiggs and his diaries for sort of big levels on the major markets. Okay, let's kick off with S&P 500. The highlights obviously making new highs, money flow on their type of analysis indicating stronger buying pressure. The upside target, the immediate target, is an advance to 2,600. Let's move on to the Nasdaq. Nasdaq's broken resistance at 6,000, a big round number, big psychological number confirming the broad advance. You've got an ascending trend line there, bullish, higher highs, higher lows, and basically a really classic chart. Again, any pullback, technical analysis isn't a precise science, but any pullback to the 6,000 area, there or thereabouts, should act as support below the market. Now, let's move swiftly on to the small cap Russell 2000. It's also making new highs, having recently traded at 15,000. Again, a very clear upwards looking chart on the weekly, on each bar representing a week. Let's move on to NYMEX Light Crude. Quite an interesting chart here. Still testing support below at 50, below basically a key support area. Follow through above 52 would signal an upside target of $54 per barrel. Reverse below 49 and the rising trend line, however, would warn of a trend weakness. So we can see that upward sloping support line from the May-June lows. A primary uptrend would be bearish for the dollar. So a primary uptrend in crude oil would be bearish for the dollar and bullish for gold. Again, worth remembering that. Let's move swiftly on to the dollar index. Fascinating contracts at the moment, given the political and geopolitical situation. The dollar index bear market rally found resistance at 94 and is now retracing to find support. Breach of the primary support at 91 would signal another major decline. Respect, on the other hand, would suggest that a base is forming. So clearly this 91 primary trends key chart points. Let's move on to gold to wrap up this segment. Breakout above 1,300. This big psychological round number would reflect strong upward pressure, suggesting another test of 1,350. Retreat from 1,300 is not necessarily bearish in this type of analysis. Respect to the key support at 1,250 would suggest that a key base is forming. So 1,250 below the market. And any failure there would warn that a primary uptrend that started in early 2017 is weakening. So again, 1,300, 1,350 above and below 1,250. Right, that wraps up the big picture, big levels, thought of the day. Thank you.